Greetings, traders. Welcome back to my trading journal. Today, I would like to update you on our covered position for January series on Bitcoin underlying on this Delta Exchange platform. Those who are not following this position, I would recommend you to go and watch a few of the initial videos on this series. Then you will be able to understand what exactly going on on this trade, right? So please go and watch those videos. So what is happening now? So we are sitting on this 50,000 covered call, $50,000 covered call, for which we collected $428, and now it is trading as at 204. So we are getting good amount of decay here. The reason why we are getting this decay is because this is a Bitcoin USDT chart on a higher time frame, which is 1 hour. Bitcoin is still trading in this range now, $45,000 to $40,000, and which is why our 50,000 covered call position is giving us some decay. So here is our summarized position. If you remember, we started this position, initiated this position on 1st of January. If you consider the overall price action on this, I don't know why this. If you consider why did we open this position, Bitcoin was trading in this range, 50,000 to $45,000 for quite some time, and that's when we plan to generate some rental income on our holding. So if you see, our holding is around 0.014 bitcoins that we have in our account. We shorted this 60,000 call initially to get some rental income, which was trading at $500 then. And then on 5th of Jan, that's when Bitcoin broke this resistance, which it was holding for quite some time, and it broke it significantly and traded below it for quite some time. After 4 days of trading below 45,000, that's when we decided to shift or roll down our 60,000 cover call from 60,000 to 50,000, and we booked this 60,000 call with around 4.5 dollars of profit, and we opened another position, 50,000 covered call again, with around very much the same premium, that is $450. And after that, Bitcoin has been quite sideways, and we are getting some decay because of which. So our trade plan looks something like this now. If Now, if you see now from 5th of or 6th of January, Bitcoin is trading in this channel now, 45,000 to $40,000, right? So now there are two things happening. Two things could happen, right? So because this was a very good support for quite some time, this will act as a very good resistance from here on for Bitcoin. If at all it breaks $45,000, then our holding position is going to immensely benefit. Whatever losses, notional losses that we are having on our holding, will start recovering those losses. If at all it breaks $40,000, which will again, our holding, there will be a huge loss in the holding. Every $1,000 movement, either up and down, we are losing $14. So if at all it breaks $40,000 from here, we'll try and get this again. We'll book some profits on this $50,000 strike that we have, and we can move on to $45,000, right? So that's the overall plan. If at all Bitcoin slides further, if at all it breaks this resistance, which I think will be very difficult to break, but then if it breaks, it would benefit our position on the holding. So, as you have seen, the position size, or the amount of holding I have in my account is very small, and even the number of calls that I've been shorting for this covered call position, the notional is also very small, 0.01 BTC, right? So though the position sizing on this covered call rental income strategy is very small here, the process remains same even for any kind of position size for that matter. If at all you have one Bitcoin, or 100 Bitcoins or 1,000 Bitcoins, the process would still remain the same, that you are going to short only those much calls which you have in holding, and that is how you can generate the rental income on your holding. So I would like to talk about the benefits of getting into a covered call position, right? So number one reason is, when you open this covered call position, you are basically hedging against the profits that you have earned on your investment. So how are you hedging your profit here? So let's take for example, right? So now my average price on Bitcoin purchase is $20,000, and now it has gone to $43,000. My profit is more than $23,000 here, but then it is still on the paper. I still don't get to see or enjoy those profits. It is still on the paper, but now I still have a risk of price movement. So if at all Bitcoin slides down, I have a risk of losing all the profits that I have earned. So that is when this covered call comes into play, and they basically provide us some kind of cushion or some kind of hedge to all the profits that we have gained on the underlying. So benefit number two, you will be able to take down your average price of your investment on a regular basis by creating this covered call position on quite regular basis. How is that possible? How can you take the average price down of your investment? So let's take again another same example, right? So I my average price of Bitcoin is $20,000, right? And now if you have seen this series completely, I plan to generate $1,000 of rental income for January series. So what that has done for my overall position, or what that has done for my investment position, is that my average price of Bitcoin has come down from 20,000 to 19,000, right? Effectively every month. So in February, in March, I plan to generate $1,000 of rental income by shorting OTM calls and generating that regular income, with which I will be able to take down the average price, which is in my case $20,000, from $20,000 to $19,000, $18,000, and so on and so forth. And most importantly, your investment becomes a hedge to the naked short call position that you are creating, right? That becomes your hedge. And this covered call itself is, as I talked in benefit number one, it basically is a hedge to protect your profit. So both these positions, the investment that you have in the script and the covered call position that you create every month, they basically complement each other, and they act as a hedge for each other. That really makes this particular position very interesting. So every investor should make sure that the profit that he is earning on his investment should be hedged with generating some income with this covered call position. This is a must have strategy that you should have, you should deploy on every script that you have in any kind of stock market. If you really like the content on this channel, please consider subscribing it. Thank you very much for watching this video again. Thank you.